All right, traders, happy Friday, everybody. Let's get a quick audio and video check in for our charts and coffee in the morning. I think we're all set. Yeah, I think we are. Okay, so hope everyone's doing well. Hope everyone's had a good week. Good morning. Good morning. Good to see you all. All right, so let's just kick this off with a couple questions that I received, and most of them have to do with the structure of the market right now. And actually, that sets us up really nicely for looking at the open. We have non-farm payroll that happened today. So if you're not already keeping an eye on the economic calendar, let's talk about that right now. If you take a look at the economic calendar, what do you have? You have non-farm payroll 8:30. This is generally what I consider to be a caution day because the markets had to digest the jobs number. It's probably not as much a caution day as it used to be because there's so many other things that are in play right now that non-farm payrolls kind of taking a back seat to some of the other things that are moving the market. But nonetheless, 8:30 a.m. non-farm payroll. Quite frankly, gang, I'm not interested in the number. I'm only interested in the way in which the market interprets the number versus what was expected. So we expected 480,000, we got 245, and probably the first thing you'll notice, and this is the kind of wacky little trading world we live in right now. Let me show you here what the intraday charts did in response to that number, because this is where we've kind of gone down the rabbit hole. And notice how the initial response on a pretty significant miss in terms of non-farm payroll was initially up. And another thing I want to point out is not only do we trade higher, we traded higher right up into the resistance that we saw right back in here. Take a look at this. This is your standard deviation of the volume weighted average price. We pretty much nailed it. So that's a resistance level that we traded up to. And then we've been trading a little bit lower. Now, why only a little bit lower? Because, gang, we're in the environment where bad news is good. Bad news is good. This is a disappointing non-farm. Now, back during Janet Yellen's tenure as the Fed chair, one of the things that she had communicated to the market was that she felt that as long as the jobs number was 100,000 per report, they felt like they were doing their job. Because remember, our Federal Reserve, the U.S. Federal Reserve, has a dual mandate. Most Federal Reserves, their main mandate is inflation. The Federal Reserve, the U.S. Central Bank, has a dual mandate of inflation and jobs. And so they kind of put out there to the market to interpret, well, as long as we're printing 100,000 a month, we're pretty content about what we have. And we're not going to see anything much better as great news, or at 100,000 isn't a disappointment. So they're not playing the game of consensus versus actual. They're just looking for a nice, steady jobs number every month. Now, is that different under Powell? Who the heck knows? But I think the market's still pretty much operating from what Yellen had communicated years ago. Having said that, the lower end of the range you can see here is very similar to yesterday's lower end of the range. Yesterday, we had a negative 2.2 standard deviation as support. It looks like that's about what we have right now going into Friday. I'm still going to be bullish, gang. Don't let the narrative around this non-farm payroll change your mind about, oh my gosh, the jobs number was disappointing. That's by and large bullish, okay? As far as gap psychology goes today, probably very unlikely. We in the NAS, we have an inside day right now forming on the NQ. On the YM, it's actually still it's barely an inside day, but the current candle is, yes, above yesterday's close, but it's not above yesterday's high. I will not consider this gap psychology. In other words, I will not be looking to fade it. And then finally, RTY, small cap, same story as the YM. You're going to find YM and RTY do tend to track very similarly to each other. And I'm doing it actually. So somebody asked me, Rod, you got to tell us what you're drinking. This is an Ethiopian roast. It's actually really nice, and I can't even pronounce it, but it's super nice. It actually has almost a cherry or wine kind of berry taste to it. It's pretty funky. Not as good though as the Honduran honey coffee. There's not honey in it, but they somehow process it with honey, so it has this nice little honeyness to the coffee. That one was a little bit better than this, but super tasty. Yeah, so Ethiopian medium roast, I think. All right, so ES, you can see here, it's the tightest. One of the things I'll tell my traders is that if you see a setup on the NQ and if you see a setup on the YM, take those two, because one's really a play on healthcare, energy, financials, industrials, transports, YM. And then the NAS is purely a tech play with a little bit of consumer discretionary mixed in. But ES is interesting. ES ends up being what I call being caught up in a tug of war between the two indices, meaning ES can sometimes act a little bit like Dow, but sometimes can act a little bit like the NAS. So the thing to remember is that if the NASDAQ and the Dow are setting up, I will oftentimes pass on the ES. Another thing I will say is don't make the ES your primary market to trade, because until you know what individual stocks and sectors are actually affecting what's going on in the ES, is it being ruled by tech? I'll probably trade the NASDAQ. Is it being ruled by its more financials and healthcare weighting? I'll probably lean towards it tracking with the Dow. The only time the ES is really typically as a day trader or even end of day trader, the only time it's typically going to outperform the other two, the Dow and the NAS, is when tech, financials, and healthcare are all moving together, in which case it's oftentimes going to outpace the NASDAQ. And that's not always going to be the case. And keep in mind that tech is the number one weighted sector across the Dow, of course, the NAS, and the S&P. So tech is huge. So when we went double green, meaning the 8, 13, 21, and 34 EMAs were all structured very bullishly on the daily, that was great news for the broader averages in general, because now they don't have to fight the uncertainty around tech. And then yesterday we had that news about Salesforce buying work, and a lot of folks asked, well, how does that work? Well, the company that's buying the other company is usually going to sell off, and the company that's being bought is usually going to rally. That's exactly what we've seen here. So then the question I received quite a bit of is there a potential buy in Salesforce? So first of all, I don't want to be in the market at the time of earnings. I don't want to trade through earnings. I want to trade to earnings. I want to trade post earnings, so pre and post, but not through. So I actually do like where Salesforce is sitting right now on two fronts. One, this is a choppy market, number one. There was never a reason to think of this as a buy the dip, let's be long into earnings. I mean, look, that's a binary play that you're willing to take with a lot of risk capital and a lot of risk. What we have now is the market having retreated lower to nearly the mean on the volume weighted average price, and also the 200 exponential moving average, which technically, from a technical analysis standpoint, is a very important psychological level. Even people who don't consider themselves technicians are going to know where those 200 period moving averages are. So I actually like where Salesforce is sitting right now. We've given it's been able to sell off. We'd like to see it simmer down. I actually like a potential long in Salesforce, not in work though, but not in work. So we definitely like that. Yeah, CRM's bleeding, but we know why, right? I mean, I totally agree. I look at it as an opportunity, right? I agree. This is an opportunity. And another thing that I was curious about, and let me show you here. Let me draw the line. This is a gap from here. So we're right inside that that large gap vacuum. Do you see how we've closed the gap, gang? That gap down with this candle here on the second closed this monster gap. That's support. Gap close, 200 EMA, volume weighted average price nearing the V square. I like Salesforce a lot, and I probably got more questions on Salesforce than darn near anything yet the last day or so. So that's my take on Salesforce. Another market on my radar today, I'd love to see a little bit more weakness, is Walmart. So those of you that are in my Sector Secrets Mastery, and you guys can check all this stuff out. A couple folks said, hey, Rog, we need some links. So you can check out what I'm doing in the futures room by way of day trading over at simplerfutures.com, and what I'm doing over in the Sector Secrets Mastery. Now, there's one other link, and this is for those of you that want a free newsletter, which we do. And this newsletter is pretty darn awesome. My partner here in the office really helps with this, really puts it together with the content, which is terrific. And that is over at countdowntrader.com. So if you guys haven't signed up for that, and that one's free, okay? Countdowntrader.com. So this goes out once or twice a week. I think the last issue, and this is not fluff. This is not about what my favorite color is. We talked about ARKK this week, and then we actually talked about a little bit of CHOP, I think, also this week. But ARKK was the last newsletter we talked about in terms of the waiting for Tesla, the fact that it trades about 3 million shares a day, and that it's a terrific way to look at the overall market. So yeah, definitely. For those who ask, Rog, where else can I get content in between our charts and coffee episodes? Countdowntrader.com. So, can I drop the links? Sure. Let me just copy this. I don't know how this is going to look here. Oh, there we go. Okay. So there we go. All right. Next up. So those were two questions. I definitely got Walmart in my sites, CRM, I just mentioned, and no gap psychology. We're dealing with a post non-farm payroll environment. And gang, what else do we have? It's the first week of the month. Next week, when we get to about Wednesday in our charts and coffee conversation, I'll start talking a little bit about the pitbull low phenomena, a tendency that we see going into the second week of the month, and then going into options expiration, the third week of the month. So we'll talk a little bit about that. So the first week of the month is typically, not always, because it depends on how the week and whether Friday was the first day of the new month or not. But anyways, usually the first Friday of the month is non-farm payroll, big jobs number. Getting most data right now, if it comes out a week, is going to be pretty still reacted to fairly bullishly, or at least neutral, because bad data is good in an environment where the market's waiting on stimulus and continued accommodative policy from the Federal Reserve. Okay. All right. So there's the link. Costco is on my watch list too. Yeah. So these kinds of trades, some of these stock trades, gang, we discuss in the newsletter, Countdown Trader. And then these kinds of trades are what I'll do in our Sector Secrets Mastery. So when I refer to the Mastery, what kind of trades I'm putting on in some of these ETFs, yeah, that's usually going to be there. And Costco is definitely one that I've been watching. Double green, potential pullback buy. Yeah, I like that one a lot. Who asked about Costco? Yeah, Nick, I like around the 371, 372 area. Volume weighted average price is sitting there. We have our 21 exponential moving average in that zone. We've got the 34 EMA wave sitting in that zone. So yes, I'm with you on that. That would be the initial layer of a deeper pullback zone. That would be the first opportunity to get long some calls. So yeah, absolutely. I'm with you there. Okay, next up is, hang on, let me catch up with some of these questions here. And by the way, One of the things that I do, and we talked about it a little bit yesterday during the yesterday's episode, was how do I scan the market? And there's a lot of symbols I just don't look at, gang. And the reason is the markets are a great big place. So we have on average about 3,000 relatively liquid stocks, depending on your idea of liquidity. You can bump that number up to almost 6 to 9,000. I don't look at that many names. I mean, one of the things we were talking about here in my office yesterday, Thursday, I have a meeting with my partner here in the office, and one of the things she brought up was something that I forgot my very own thing. Back in 2012, I wrote a book called 4X on 5. Not so much because it's not really just a Forex book, but it was a philosophy about the way that I wanted to start back in, again, almost 10 years ago, 8 years ago, wanted to start trading, which was, can I look at daily time frames for about an hour a day, put in my alerts, know my strategy, and just wait for the alert to fire off and put in my trade, not be glued to my but be glued to my 9 monitors day in and day out. And so I don't want to be scanning 9,000, 6,000, 3,000 names. I want to be scanning within a very specific, liquid, pre-curated group of names. And so when folks ask, well, Rog, how do you scan? You're looking at it, gang. You're looking at it. I'm going to use the ETFs as a way to let the market tell me where the interest, where the volatility, where the volume, the tension, right? Where all that is at. And then I'll pick from that group, knowing that I've got a very symbiotic, very connected relationship between what I call the boats and tide. So I don't go scanning the markets looking for a needle in a haystack. The needles are here, right? The ETFs give them to me. So yeah, I had a lot of questions about the scanning. I don't make it complicated, gang. And another thing that we were talking about yesterday is the fact that, and I think SMH is probably the best example of this. If you have something that's working because the structure is really, really good, stick with it. This idea that, well, TSM was a good trade. No, look, if the structure is still the same, if the way in which the opportunity initially presented itself, if that environment is still valid, gang, I've been in and out of SMH pretty much since the end of June. And I haven't let it go. It's been double green most of the time. The path of least resistance is up. I'll just keep going back into that name again and again and again. So again, you don't have to keep looking for brand new names, right? The allure of the shiny and new is very, very tricky in trading. If you've got something that's working, and we know how to measure that now with the tools to see that the environment is right, keep working it. Keep working it. And that simplifies the process. So the questions on watch list, there's a lot of symbols I'm just, period, not interested in, unless they have weighting in the passive investing universe. Now, I'm not saying that's good or bad, but let me take an example here of Phil asked about CLDR. Okay, so what I'll do typically, before I even jump into CLDR, is I'll head on over to ETFDB and just see, is there any weighting in the passive investing universe? And if so, where? If there's not, I'm typically not interested, right? So let's take a look at CLDR. Doesn't really come up with anything. Now, it doesn't mean you can't trade it, but I will typically not look at names like that. And then if I dig a little deeper, there's two things that are an issue for me on this one. It's sub 20, and it's also not trending. Doesn't mean you can't trade it. To me, anything that gets down to $10.50 to $10 is probably fairly fadeable, meaning buying. And I won't short stocks under $20. I think they have a tendency for bottom picking, opportunistic bottom picking. So I'll usually look for long positions and stocks that are sub $20. But again, I think it's really important. Again, I'm not going to say I trade everything. What I do is I look at these specific names that are tethered to a larger narrative, index sector stock, and that's what keeps this really low maintenance and effective. So NVIDIA is, for me, no, it's completely sideways. I would say I would be bullish because a trend that preceded the chop was up. I mean, I'm certainly not going to short this stock, but it's really ultimately going to be a momentum breakout with high volume confirmation. So this would be an ideal stock to look at for a potential squeeze. So for those of you that are fans of the squeeze, right, this is the kind of environment I like. Yellow wave, dominated by blue grab candles, really compressed. Now I need a catalyst. I suspect we might see a little bit of weakness going into the dividend date. And then if we trade down to the bottom of the range, that would be one opportunity to get long calls. And the other is going to be on the movement higher through resistance with a volume, higher than normal volume confirmation. So NVIDIA is not a trending stock to me, but it's a stock that was trending, now is consolidating, and I'm going to be looking for a continuation. But let me mention this. If you're looking at, well, let's work backwards again. If you're looking at NVIDIA, the first thing you can ask yourself is, well, who's NVIDIA hanging out with? If I like NVIDIA, might there be some other places I like even better? Well, that takes us right back to the SMH. So what I'll do is look at other names in the SMH. And while NVIDIA would be a fine breakout, please, please, please note that there's a lot of double green in SMH. There's a lot of, I think Qualcomm's an interesting conversation here. I think Texas Instruments and NXPI could be very interesting. So while I don't mind momentum breakouts from consolidation, I will prioritize trend following pullback buys. So it's not that you can't trade NVIDIA. One of the things you guys will find, and I do this because, well, I really care. The question is not always, do I want to trade Texan, right? TXN. The question is going to be, why do I want? So sometimes before you start going about setting up a trade in a particular stock, ask yourself, what is the edge this particular stock is giving me? Why do I want to trade it? And what else might be behaving in a similar group, like semiconductors? What else might be behaving in a way better than the stock that I'm looking at? So that goes right back to watch list building, gang. So those are things that I would highly, highly, highly recommend you look at. And so I hope that helps. I hope that makes sense, and that's something that you guys can just put to work today, that is applicable and practical immediately. All right. Do I short bull markets? Never, never. If I've got an uptrend, I am not going to pick a top. Never. So again, for me, the higher probability trade is going to be playing the pullback of an uptrend or playing the bounce of a downtrend. Okay. So if I'm going to play anything, I talked about a few names that are interesting at some oversold levels. Again, remember the time horizon. I'm not talking about 6 months from now. I'm probably hardly even talking, 6 weeks from now. I might be looking at the next few weeks of a bounce in Walmart or a bounce in CRM. So also one of the common things that I think when a group of traders get together to talk about the markets, make sure we're on the same page about time horizon. I'm not talking about portfolio building here. So most of these are just going to be opportunistic trades on retracements. Okay. All right, gang. I really do try to keep this to 9:20 because I'm going to head on over to the futures room. I'll see you all in the futures and the options room later on at noon today. Check out my free newsletter, Countdown Trader. Really good stuff. It's usually sort of a highlight of the things that I've got going on for the current week. So it's a great supplement to what we're doing here with charts and coffee. And of course, this is where I hang out over in the Simpler Futures room. And if you want to follow my stock and options trades and ETF trades, that's over in the Mastery. Okay. Thanks as always for joining me for our session. What brand of this is Volcanica. Rocking the Volcanica today. All right, gang. I'll see you all on Monday. I hope, let me know. Give me some feedback on these sessions. I hope they've been helpful. And I'll see you guys next week. All right. Trade well. Be good to each other. I'll talk with you soon.